Hello everyone. I welcome you all in today's Friday FinTalk session. In Friday FinTalk, we talk about financial awareness. So our today's topic is how the market has performed in the month of July 2023 and which particular sector has performed in last month. So Unmesh sir, please, I request you to start with the session.
Okay, great. Let us talk about how markets have done in the last month. So if you recollect, markets have crossed 18,600, which was the all-time high in the last month. And then when I'm talking about market, I'm referring to Nifty. So Nifty went ahead crossing 18,600, then it went up to 19,900, and then it pulled back itself to some extent. So if you recollect, market had registered 18,600 as the level way back in October 2021, and that level was taken out by the market in the last month, that is July 23. Now, if you look at this kind of a scenario, people usually feel that once the market has crossed 18,600, it is now at all-time high. The market must be very very costly, and then how one should behave during these kind of scenarios. So let us understand, what we are going to, what we are thinking about the market at this point, and how some sectors have done in the last month. So, if I have to talk about the sectors in the last month, the the most performing sector in the last month was pharma sector, and pharma sector has given returns of approximately 11%. So I am very broadly talking about these percentages and returns. These are not the precise figures. At a second number comes the small cap fund, and small cap fund have returned around 6% in the last month. On the third number was mid cap sector, and mid cap has given around 5% returns. Then on the fourth number was auto index or auto sector, which has returned around 2.24, 2.25%. Then comes IT sector, which has returned around 2%. Then the broad index, which is Nifty 50, it has given around 1.2% kind of returns. So these were the broad returns which markets have produced in the last month. And I mean, of course, we are not talking about the fund returns here. We will be probably talking about the fund returns later once Mansi asks me.
Yes.
But then broadly, the market has been performing very well during the July month. Broadly, because of the all-time high breakout, few good news is in on the tax collection front and all that stuff.
Hmm.
And of late, they have corrected in last 3 4 days. If you would have seen it, because of the rating agencies which have cut down the rating of US markets. And today's day was really a good day because again the rating agencies have upgraded India as a market, and that's where the market have given us the boost for the day. Mansi.
Yes. So when we talk about mutual funds, there are three main pure equity categories, that is large cap, mid cap, and small cap. So can you tell us whether how these categories have performed in last month, and especially the scheme specific wise, which schemes has performed in this particular categories?
Absolutely. So let us start with large cap as a category. So large cap if I talk about large cap as a category, then there are three funds which have performed, which are at the top. The topmost fund is DSP Top 100 Equity Fund, and it has given 2.55 percentage returns in the last month. At second number comes ICICI Prudential Blue Chip Fund. It has again given 2.53% returns. And at the third number comes Quant Large Cap Fund, which has given 2.4% returns. Second category is a mid cap category, and in mid cap category, at the top comes JM Mid Cap Fund, which has given 6.67% returns. At second number comes Tata Mid Cap Fund, which has given 5.98% returns. And at the third number comes Quant Mid Cap Fund, which has given 5.69% returns. Then let us talk about the small cap funds. At the top in small cap category is Aditya Birla Sun Life Small Cap Fund, which has given 6.20% returns. Second number is Quant Small Cap Fund, which has given 6.12% returns. And at the third number is DSP Small Cap Fund, which has given 5.92%. Let us talk about a few sectoral funds as well. So let us talk about the pharma theme or pharma fund. So at the top among the pharma theme is Tata India Pharma and Healthcare Fund, which has given whooping 10.26% returns in the last month. At
Okay.
second numbers within the pharma category comes Nippon India Pharma Fund and it has given 9.47% returns. And at the third number is UTI Healthcare Fund, which has given 9.35% returns. I also wish to talk about the technology funds because it has been our favorite theme for some days now, and it will be a favorite theme for the times to come as well. So
Yes.
among the tech funds, Franklin India Technology Fund has done well. It is topping the chart in the last month with 6.68% returns. And the second number is ICICI Pru Technology Fund with 2.87% returns. And on the third in the list is SBI Technology Opportunities Fund with 2.51% returns. Mansi.
Yes. So you have told about the pharma sector and IT sector right now, but henceforth, which sector do you feel that one should go about for investing? And that will generate a good return over a period of time.
Yeah, so if you recollect a few months back, 6, 7 months back, we had recommended that one should invest in the global funds. And
Right.
whosoever has invested in the global funds at that point in time, they have really got excellent returns in today's scenario. So
Right.
that was one of our recommendation. But apart from that, we had also recommended investing in banking and financial services fund at that point in time, and as well as the IT sector or the funds which are from IT sector.
Yeah.
So on one side, global funds have done really well. Banking and financial services has also done well. IT has not done well so far till to that extent. But we are still recommending IT as a sector for investment for next 3 to 4 years. The horizon is little longer. If you wish to take the risk, this is a risky bet, of course.
Okay.
On the second number comes the pharma fund. We believe that pharma fund is available at a cheaper multiples, and one should invest at these multiples in the pharma funds for next 2 to 3 years kind of a period at this point. And of course, one should keep investing in the banking and financial services fund even at this point in time. But then the global funds we feel now are little heated up, and you may avoid investing in it. While I'm saying this, we always keep on telling all our viewers and all our clients too that our investment should be as per your risk profile and as per your asset allocation. So
Yes.
one should not go and haphazardly invest in these sectors or these themes. You should do your due diligence. You should do your own asset allocation or take the help of some intermediary experts, advisors, distributors, and then you should decide upon your investments. When I'm talking about these themes, it is like adding some flavor to your portfolio. And if you have adding that flavor to your portfolio, then probably you can add pharma funds or IT funds at this point in time, or maybe banking and financial services fund to some extent in your portfolio. Mansi.
Yes, thank you, sir. So I would like to add one point over here that we are not recommending any schemes or any particular sector as such for investment. Please
Absolutely.
consult your financial advisor before investing into any type of mutual funds. So going for the next question. So if someone has one amount right now to invest for long term lump sum investment, that is one time investment, how he should go about it? How he should invest at this market level?
Right. So usually these are the difficult times when the market is little heated up. These are the difficult times for deciding any kind of investment. Now let us understand it from the market perspective. As I told you, the Nifty is around 19,400, 500 at this point. But when I think about it from the Nifty's P multiple context, then we believe that market is around 60 to 70% heated up, not 100% heated up at this point. So
Okay.
if market has to be 100% heated up, probably it has to achieve or it has to cross a P multiple of say 27, 28. And usually what we have seen is, the previous year of any election, any general central elections, it usually gives a good rally in the market. So if we believe that, or if we go by that context, then probably this year is going to be a good year for the market, and the rally will continue for next 6, 7, 8 months kind of a period. So if we have to believe that, then we feel that even the lump sum investment at this point can be done, but we have to have a cautious call at this point, because we all of us know that market is little heated up. It is 60-70% heated up. So for our clients, what call we are taking at this point in time is that we are asking them to put lump sum of 40 to 50% of their total portfolio in the market, and the other 50 to 60% will go in a staggered manner in the market. So staggered manner, when I'm saying, it means via systematic transfer plan or via manual switching in the from liquid funds to the actual funds. So these are some of the tactics which we usually adopt at this point in time. Contrary to what people think, usually people think that when the markets are down, those are the difficult times to invest. But we have a contrary feeling, or anybody should understand is that these are the most difficult times to invest, because market is already at high, and the chances of you finding the returns for next couple of years would be difficult when we invest at this point in time. So
Right.
we have to take a very, very cautious call during these periods. But we believe that next 6-7 months can be good for markets. So you should not shy away from the markets. Any time is a good time for investing in the market. Only that you have to tweak around it as per the levels of the market. Having said that, Mansi has not asked me about the SIP investment, but I would like to add this point to it, that
Hmm.
SIP investments can be done at any point in time, because they already work on the principle of rupee cost averaging, and then the rupee cost averaging works better at any entry point. So whether the entry point is lower or higher, you should keep on doing your SIPs, and then your investment should be done for your goals. So, Mansi, that's how one should go for investment at this point. Hope I'm clear.
Yes, yes, sir. So as you said, ki one should go for investment either by SIP or one-time way, but it should be a methodical way. Like do your risk profile, do your asset allocation, plan for your goals, and then you can go for the investment either via SIP or a lump sum way. So we do conduct this Friday Fin Talk on every Friday on Facebook as well as on YouTube. So I request all of you to like and subscribe our YouTube channel and share our videos so that we can reach to maximum people. So Unmesh sir, if you want to add something regarding our this activity,
Nothing much. Do join our channel. Thank you.
thank you.